Good morning, friends and clients. This is Tuesday morning. It's June 2nd already. We've seen some very upsetting riots and protests happening over the weekend as a result of what's happening in Minnesota. In many ways, people feel that COVID-19 is done. People are in close contact with each other in such a way that everybody's wondering what happened to COVID. Uh, you think that the markets would be affected negatively as a result of these protests, but at the moment, the markets are not really affected. What's driving the markets more is the positive news about economies opening up in different types of states and local economies opening up. I suspect that we will have more and more tension with China as President Trump is having further discussions about what we call trade wars or trade deals, but also the ramifications of not being honest with the rest of the world about the virus and when the virus came out. I suspect that I don't think President Trump is going to let it be, but I'm not a politician, but we'll see probably economical tensions heating up again with China. Locally, we've seen some restaurants opening up again. It is good news. It's good to see choices increase. Some restaurants, as we've seen, our economy is so driven by restaurants and entertainment, right? But some restaurants we see have chosen to stay closed because it's just not economically feasible for them to be able to even occupy at a 50% ratio. But don't know about you, but I've been enjoying sitting on the patios, and just good to see people coming back to normal. Traffic is picking up, at least on my commute, and you probably can see it as well. So the economical engines are starting to re-engage. What's surprising is how little down the stock market is year to date. We're down about 5.5% on the S&P 500. On the NASDAQ, which is predominantly technology stocks, we're actually positive for the year. To put things in perspective for you, from the beginning of the year, we topped at about +4, +5% on our indexes, but went down as much as -30% year to date, and we've come back all the way to about -5. We're seeing the markets having a very positive bend at this point in time, more so than negativity. That leaves us with the biggest dilemma that most people have. If you've transitioned money out of markets and put it into cash positions or more secure positions, the biggest dilemma is that it feels like the market is pulled away. The ships is pulled away out of the harbors. And the big question is, when do I re-enter into the markets? Also, some folks have some cash on the side that they've been trying to drip into the markets, waiting for more negative days to come in, but there is a lot of positive days. So the big question lies as to how do I re-engage my money and do it in such a way that I don't miss out. We have two very unique strategies that we're helping clients to do that with at the moment. The one unique strategy we utilize is a tool that is available to us where we can give our clients upside potential of what the markets brings, but at the same time, downside protection. If you know that you have downside protection that pretty substantially is built into your decision of when to re-enter into the markets, it gives you confidence to actually re-enter and take advantage of the upside potential. The second idea that we have is we developed a strategy where we are identifying large company stocks that have been affected more so than other companies as a result of being in the specific industry that they're in, like for instance, travel or entertainment. Companies like Disney or the airlines or the cruise lines. Our trading partner, Sterling Capital, has developed a strategy in which we are buying 25 stocks that have been depleted more than other types of stocks, but they are large US company stocks. It's to keep with the continuous theme that we are getting from Warren Buffett, right? That says, don't give up on US company stocks or even large cap. It's where we see most of the stability in the recovery in the markets going to be. So for some clients, we've been investing and entering into those opportunities to take advantage of the opportunity that these stocks are predominantly lower than the rest of the markets and have the potential to spring back on a strong basis. So two very distinct strategies we're utilizing to help people take advantage still of a low market to enter back into the market's place. I want to talk with you quickly about a whole different environment where most of our clients have wealth, and it is inside of your company-sponsored 401k plan. Most of the times, financial advisors cannot get involved in your 401k plan since it's only available to be able to invest from an advisor perspective when a person turns over the age of 59 and a half or retire or leave their current employer. we have unique technologies that we've implemented in the last 5 to 6 years, helping our clients to manage and monitor the investment choices and allocations inside of your 401k plan. The reason we chose to do that is because typically the 401k plan becomes such a large portion of your total retirement nest egg. And if you're not paying attention to the allocations of the investment decisions and choices in there, it really affects the amount of money that you can have at the end of the day and be part of your nest egg. So we can reach into and help you with your investment allocations while the money sits on your 401k platform. Very, very important part of how we can help you also build wealth on that very, very important pillar of your total picture. So if you like to have more information about how we can help you with your 401k, make investment decisions to re-enter back into the markets in a way that is safe, conducive, and takes the guessing out of the entire picture, um, feel free to give us a call. My calendar is there's a link just right on the bottom of this video that will put you right through to our calendar, and you can simply schedule a 15-minute conversation. If this video is of help to you or any friends or any colleagues or people you care about, feel free to forward it on to them. We will continue to send these videos out about twice a week and during this period of time until we've come back to normality the best way I know it would look like. So I don't know about you, but I've been thinking about some 2 or 3 really good things that happened as a result of COVID-19 to be positive about what we all experienced. Stay safe, my friends, and look forward to being with you again.